Well, I wanted to dive into this energy market here because it does have a definite impact through the ethanol connection into the corn market. It's been that way for a couple of weeks straight here with the fall in the crude oil. Let's see what crude oil is doing this morning. On West Texas Intermediate crude, we are now just kind of holding our own after some just horrendous drops in value over the past couple of weeks. It looks like, at least for the time being, it's kind of stabilized here. We have the May contract about flat on the day. We actually have a little increase in price. If you go out to that June contract there, we're up about 20 cents. So that is priced at $24.56 per barrel right now. So just a little bit of a firmer tone, especially on all these deferred contracts from June on out. So hopefully the coronavirus will run its course and we'll get business kind of back to normal by the time we get into that summer time frame. That's kind of reflected in the price here right now. And if you look at the heating oil trade, I noticed earlier where it was under a little bit of pressure. We have the April contract down about a penny right now. We're at 99.7 per gallon. This is on the April futures contract. This is how we price our diesel fuel, of course. And the May contract is down basically 1 penny as well, right at $1. We'll call it $1.3 per gallon there. Let's talk about our corn market here for a second. Let's see what corn is doing. Corn is under a little bit of pressure this morning. It cannot seem to get much traction, even though you have the other markets surging ahead. For example, like soybeans and wheat. We'll get to them in a second. So on the corn, we have the May contract still down a couple of pennies. We're at 341 3/4. The reason for the consternation in the corn market is the fact that we had some really big sales of 756,000 tons of corn last week to China. And yet the market has not had the ability to really do much to the upside here. A lot of concern about the demand for ethanol because of the low crude oil price. A lot of ethanol producers in the red. December corn right now down 3/4. We're at 362.5 per bushel right now. But then you get over into our soybean trade, and this is where all the traders have been telling me that we are starting to see that bidding up for acres that happens every spring. So the soybeans, right now, they are gaining once again. The May contract now up 11 1/4 cents. We're at 873 3/4. So you have your new crop November contract at 869.5, and that is up 8 3/4 cents on the day. I wanted to look at the soy meal here and see what it's doing, because that was a big newsmaker last week. In Argentina, there were some port disruptions, and Argentina is the world's biggest soy meal exporter. They take their soybeans and they turn them into meal and oil and export them that way. Well, with the port disruptions last week, that really propped up the soy meal market, and it's doing it again here today. You can tell the May is up $3.20 a ton. We're at 328.40. And the July contract gaining over $6. We're up 6.10 right now at 320.50. Now, on the other hand, the soy oil market tends to follow what's going on in Malaysian palm oil futures. Now, today it's actually higher. Sometimes it goes the other way because of the palm oil market's ties to the Asian demand over there. And that has really slackened off recently due to coronavirus and the COVID-19 coronavirus. So anyway, soy oil today firming up a little bit, and so we have all three components of the soy complex here higher. We have May soy oil 26 points higher at 25.90 per hundredweight. Then you get to the wheat, and we have some big gains in the wheat market today. We currently have Chicago showing May 13 1/4 higher at 552.5. Chris Swift mentioned in our last segment here about the demand for bread in the supermarkets, and that's kind of a global situation right now, a global thing. July is up 13 cents. If you look at Kansas City wheat, it's doing the same thing. We have the May contract 15.5 higher again at 484.5, and July 15 3/4 higher. We're at 488 per bushel. That's, what is that, 16 cents, 15.5 cents off of our earlier low today. Now let's take a look at the Minneapolis wheat as well. It is showing gains of anywhere from 7 to 10 cents. It's kind of chopping around here. The May up about 7 cents at last check at 527 3/4. I want to come back in a moment and we'll get you updated on our livestock trade, all kinds of stuff going on, and we'll talk about it when we come back. On the live cattle trade, we opened up a limit higher. Let's see what they're doing right now. And as we go to the big board in Chicago, still lock limit higher across the board. On the feeder cattle market, let's roll over there. We had the nearby March contract at one time trading a little bit, but it's limit higher with everything else, all the others. So they're $4.50 higher on feeders. On the lean hogs, let's switch over there. We have April now and May, both limit higher, $3 higher. They kind of elevated up to that point and then stuck. Now June is up $2.92, July up $2.95, August $2.88 higher. I want to go to Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri, and talk about this. Boy, the cash cattle market really caught on fire here last week, and it seems like there's no catching it at this point. The futures can only go so far.
Yeah, we'll have expanded limits today, Marlon, or tomorrow, but that may not even be enough to contain this. Cattle expected to be quite a bit higher, and that leaves April and the June contracts all at a heavy discount to where the cash is going to be, and we're going to narrow that spread up this week. That's the job of this market. But a lot of people don't realize that the spread trades continue even though the futures are lock limit. And April has gained against June in the spread market by $2. So there's some big moves underlying, and that suggests that April is really undervalued and is going to see a pretty significant rally here this week, it looks like.
So, Brian, what is happening with the local sale barns around the country with everything else pretty much shut down? Are they still operating or just on a skeleton basis or what?
We have not heard that they have ceased operations. They're continuing to operate pretty much as normal, or at least as many workers as they need to fulfill their work and get things done as much as normal as possible. And so, the country's beef supply is in high demand right now, especially at the retail level. And they're going to, I think, probably ramp up kills in an effort to try and meet that consumer demand. We almost have to just keep things going as normal or even increase speeds of the kill facilities.
On the livestock summary from last Friday, we did have a little bit of cash cattle activity. It looked to be a cleanup trade, and we had some that was reported in Texas between 110 and 112 per hundredweight. So basically about steady with what it had been earlier in the week, but it did firm up earlier in the week. Steady basis on the dress basis cattle, about 175 higher. Only got about 15 seconds here, Brian. Do you think that cash market will firm up this week, and by how much?
Yeah, I think we're looking anywhere probably between 115 and 120 being traded in the Southern Plains. But right now it's kind of a crapshoot, but I think we're going to see significant trade volume at higher money this week.
Wow. Okay. Thank you, Brian. Appreciate it. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Exciting times, Janet.